Welcome. In this video, did Xn coin break the big downtrend? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully examine the chart, we can clearly observe the presence of a descending trend structure that has been exerting pressure on the price for a long time, indicating the continuation of a bearish sentiment in the market. This trend line has repeatedly pushed the price down in the past, suppressing upward attempts and increasing selling pressure. However, with recent developments, this structure has now been broken, and important signals suggest a positive shift in market dynamics. The price has managed to break above this descending trend, overcoming this technical barrier. This indicates a change in investor sentiment, with buyers gaining strength and the market beginning to emerge from a bearish psychology. Trendline breaks, especially those that have been valid for a long time, are extremely strong signals from a technical analysis perspective. Such breakouts can be the first step of a trend reversal and may also signal the beginning of a new upward wave. In the current situation, the price breaking this descending trend indicates that a different psychological environment is forming in the market, that investor optimism is reviving, and that buyers are becoming more active. Following the breakout, the price has now entered the retest phase, a common concept in classical technical analysis. In other words, the trend line that previously acted as resistance is now being revisited by the price to be tested as support. These kinds of retest movements are crucial for gauging the structure's strength and observing how buyers respond to this new support area. If the price is met with strong buying interest at this point, it not only confirms the breakout, but also indicates a high likelihood of the uptrend continuing. A successful retest phase activates the break-retest rally strategy in technical analysis. This structure is considered a highly reliable formation for buying opportunities, as the break of the descending trend shows that the sellers have lost power and the buyers have taken control. The retest at this point is crucial for confirming that a new support area has been established. If the price begins to move upward again without breaking the support, it strongly suggests that a new bullish trend is being built on solid ground. Looking at the overall market structure at this moment, the price staying above this descending trend confirms the strengthening of the bullish scenario and clearly shows that investor expectations are turning positive. Technically, this indicates that the bearish structure has ended, a new bullish trend has begun, and this trend has the potential to reach higher levels in the short, medium, and even long term. Additionally, an increase in volume following such breakouts is highly favorable. It shows that more participants are now active in the market, trading volume is increasing, and price movements are becoming more decisive. If this breakout occurred with high volume and the retest is also supported by strong volume, a bullish move is expected to continue with strong momentum. In technical analysis, breaks of descending trends generally indicate a complete change in market structure. This change is felt not only in prices, but also in investor psychology. When a descending trend is broken, many investors start to take positions, as downside risks have decreased and upside opportunities have become more attractive. This increases buying pressure and accelerates the upward momentum of the price. But we can't rely solely on trendlines for analysis. Let's now take a look at other metrics as well. Stay tuned. Considering the intricate structure of the Elliott wave theory, we can say that the current price movements are taking shape within the second wave. This wave structure typically follows a strong bullish movement and serves as a corrective phase, offering investors a new opportunity to enter positions. The second wave is often a period when investors take profits and the market takes a short breather. Although it represents a temporary decline, it actually signals a very healthy structure, because the real major move usually begins with the third wave that follows the second. And at this point, we are faced with an extremely favorable outlook in terms of bullish expectations. According to Elliott theory, the third wave is typically the strongest, fastest, and often the most voluminous move in the market. This wave represents the phase where the majority of investors have recognized the trend, the market has decisively chosen a direction, and prices move with significant momentum. In the current situation, the price nearing the completion of the second wave and preparing for the third wave can be considered a highly noteworthy development. With this transition, prices are expected to surge upward with great energy. The magnitude of the third wave is usually measured relative to the first wave, and Fibonacci ratios play an important role here. In technical analysis, this wave is expected to be at least 1/618 times the size of the first wave. This ratio confirms that the market has entered a healthy uptrend. However, in some cases, this ratio can be much higher. For example, third waves extending to 272, 618, or even higher Fibonacci expansion levels have been observed. This means that if the second wave is indeed nearing completion and the price transitions into the third wave, a very strong and sustainable bullish move may be ahead. When analyzing the current price structure, it can be assumed that the second wave is largely completed and the price is now preparing for the third wave. This preparation phase often features sideways or slightly volatile movement. During this transition, investors strengthen their positions and seek the support necessary to continue with a more solid foundation. Once this stage is passed and the third wave fully emerges, prices can shoot upward like a rocket. For this reason, the current structure presents an extremely promising and potentially rich scenario from a technical analysis perspective. Additionally, the Elliott wave theory is not limited to wave counting. It also allows for time analysis of when these movements might occur. If the second wave structure has matured enough in terms of time, this is another positive sign that the third wave may be about to begin. Once the third wave starts, price movements are generally fast, determined, and steady. This phase is also known as the recognition phase of the trend. In other words, investors have now recognized the uptrend and are rushing to get on board. These strong technical signals about the market structure suggest not only short-term, but also medium and long-term targets could potentially reach much higher levels. In particular, the Fibonacci 1618 and 2272 levels are important technical targets that have been tested and proven effective many times in the past. If the price has indeed entered the third wave, not only is reaching these levels possible, but even surpassing them is within the realm of possibility. This is an extremely positive development for investors, as reaching these levels not only shows that prices are rising, but also confirms the strength and health of the trend. When we examine the behavior of the RSI indicator on the current chart, a notably striking and promising structure stands out. Specifically, a rising trend line has formed along the trajectory established by the RSI line over time. This trend line is a visual and analytical reflection of the strong momentum within the RSI's internal structure, which is known for its ability to signal the general direction of the price in advance. This rising trend line on the RSI shows us that the indicator has been consistently making higher lows over time, indicating a steady gain in strength. In technical analysis, this is considered a positive signal regarding the sustainability of an asset's strength. The rising RSI trend is not merely a graphical drawing. This structure is a result of the market's internal dynamics, the supply-demand balance, and investor psychology. Occasionally, pullbacks to this upward RSI trendline can be observed, which is entirely natural. Every upward movement is often followed by short-term corrections, which are necessary for forming a healthier price structure. At this point, the current price action approaching this RSI trendline signals a very important technical development. The RSI touching this trendline, as it has in the past, may once again lead to a strong upward reaction. When past data is reviewed, it is seen that each time the RSI touched this rising trend line, it typically bounced strongly, followed by positive price momentum. This shows that investors consider the RSI trend line an important support level, and that such touches are seen as buying opportunities. The RSI trend is significant. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.